Silver wake up. JPMorgan just called for a government sit down. Why are they doing this now? This week wasn't just ugly. It was uncomfortable in a way markets get just before the rules shift. Prices collapsed, confidence cracked, and while everyone was staring at red candles, power was quietly moved behind the scenes. When chaos hits all at once, it is not random. It's pressure being released, and pressure always exposes who was prepared and who was not. And now JPMorgan is calling for a government sit down. Check this out. If you're interested in silver, click that link in the description. Money Metals is holding this contest. They're giving away 20 Silver Eagles. Every month they hold this contest. Last month's winner never claimed his prize. We have 20 Eagles just sitting here with no home to go to. Don't be that guy. Click that link I left down below. Be the next winner on the list and take home that silver. Now, look at this. Let's start with what the crash actually was. This was not regular selling. This was a forced exit. Silver had gone nearly vertical in a short period of time, and when markets do that, they become fragile. Too many traders pile in the same direction, using leverage, expecting smooth sailing. When expectations shift, rates, the dollar, risk appetite, the market doesn't slowly change, it snaps. Margin calls kick in, positions get closed whether people want to or not. That's why moves like this feel violent. Look, Reuters reported silver fell roughly 27% in one day and more than 30% across 2 sessions. That was last Friday. It was one of the steepest drops in decades. This kind of move doesn't mean silver failed. It means the trade got overcrowded and the market forced people out. Here's the part most people never get explained. After a big drop, exchanges don't just sit back and watch. They tighten the rules. Here's what happens in plain English. If you're trading futures and the exchange raises margin requirements, you suddenly need more cash just to keep the same position. If you don't have it, you're forced to sell immediately. That forced selling pushes prices lower, which triggers more margin calls, which forces more selling. It becomes a loop. That's why crashes feel out of control. CME Group raised margin requirements on COMEX silver futures, and they raised them from 11% to 15% immediately after the initial sell-off. This was not fear, it was mechanics. And mechanics don't care what you believe about silver in the long term. If you're getting value from this, just know this is only 3 minutes taken from the full breakdown. Click the link below to become a premium member and watch the full video. We track the silver market minute by minute and post full-length breakdowns every weekday so you know when to act on silver. Join as a premium member today. This is where JPMorgan matters and why I keep saying the crash was a signal, not the event. JPMorgan is one of the largest and most experienced precious metals players on earth. They don't chase headlines. They don't move operations on emotion. And recently, they made a move that should make you pause. They shifted a major portion of their precious metals trading presence towards Singapore, right in the heart of Asia, where physical demand is strongest and supply is tightest. You don't move people, capital, and infrastructure halfway around the world because of a bad week in price. You do it because you want to be closer to where real metal is changing hands. While paper prices were collapsing in the West, JPMorgan wasn't getting out. They were getting closer. So zoom out for a second. A violent crash flushed leverage. Exchanges tightened the screws, and one of the biggest banks on the planet quietly moved closer to physical demand. That doesn't look like a market that's finished. It looks like a market that just forced weak hands out and handed control to stronger ones. And now today, while you're watching this video, the U.S. is indeed hosting a critical minerals ministerial today in Washington, D.C. Click the link below, become a premium member, and watch this full video.